Let's bring in Kate Rogers to discuss. Kate, I think with Chipotle too, the Brian halo is gone. I don't know if they got it over at Starbucks, but it's a little bit gone from Chipotle now.
So it's so interesting you mentioned those two names, Kelly, Chipotle and Starbucks. They've long had pricing power, and that's one of the things we're going to be really watching for this quarter. Which brands have it and which brands don't? What's been interesting to kind of watch in the first 6 months of the year, you're seeing a lot of these fast food names and fast casual names kind of struggle more, and the casual dining names have been performing better. One reason could be that people perceive you're getting more for your money, more bang for your buck, and more of a sit-down dining experience, which is what some of those like a Darden with parent company rather of Olive Garden could be offering to a consumer. So that's going to be one area of focus, of course. And then the other one is just going to be performance of the low-income consumer. That's something that we've heard a lot of challenges and focus on from brands like McDonald's, again, across the fast food space. But they've got the intro of the snack wrap. That's a good example of something that could cater to a lower-income demographic. And we'll see how it performs and get more updates soon.
But overall, how do you think they'd characterize business? We had the consumer confidence massive shock earlier this year, which now with the numbers this morning is kind of slowly giving way to something more positive.
There's no getting around that dining out is still more expensive than cooking at home and grocery shopping. Both have costs, but it's all about where consumers want to spend their money. And again, some of those more premium brands, you mentioned stock performances for the year. Other names that come to mind here outside of the Chipotles and the Starbucks of the world would be Cava and Sweetgreen. Those names were doing really, really well last year, right? Because they were a little bit more expensive, a bit more of a premium offering, but people were willing to pay for it. Now you're seeing investors kind of pulling away from some of those names as consumers get more price sensitive.
Well, let's all wildly speculate here. Why not? It's Friday. Kate, you ready to do that? Because I'm looking at my FactSet screen over the past 3 months. Do you have any idea what the best performing restaurant stock is? It's up 127%. I did not until I just looked. It's Red Robin Gourmet Burger. Now, all we've done is talk about the price of beef at record highs. And here's a company literally with beef in a burger in its name, and it's soaring. Kate, is that because are consumers just kind of brushing these prices aside, or are they not seeing the higher prices because the restaurants are, for lack of a better term, eating it?
I think it's the haves and the have-nots right now, Brian. So the consumers that are willing to spend money at certain chains, you can see investors putting their money behind some of those chains. But again, to bring it kind of back to some of the key names that we're always watching here, particularly in downturns, like a McDonald's that's always done really well during recessions. They've been struggling to bring that consumer in. And as you mentioned, those beef and cattle prices up, I believe, over 12% year on year. That's going to be something that these restaurants have to contend with in the back half of the year, right? If their costs are going up, do they pass them on to the consumer? Can they pass them on to the consumer in this environment? Starbucks is another name that has said it's not raising prices for the rest of its fiscal 2025, but they may have to think about it next year if input costs continue to go up. So we're going to be watching all of that this quarter. And again, kicks off on Monday with Domino's, one of the best performers of the year, along with Papa John's and Wingstop. All of those names were pandemic darlings, kind of struggled, and now they're doing really well again this year.
Red Robin.
You ever been? I've never been.
Is that what? Did you say Red Robin?
I've been many, many years ago. It's been a long time.
I think because you're on the West Coast now, Kate. I think if you're not going to In-N-Out Burger, if they have those in the Bay Area, I know they're big in L.A. and that area. I've never been to a Red Robin, and this weekend maybe I'll go.
Maybe you gotta go.
Why don't you go to Red Robin?
One more quick thing, guys, as we're just talking about these restaurants on the West Coast. Another item to watch, of course, will be any commentary around immigration and tariffs. We saw last month Jack in the Box, which is heavily concentrated out here on the West Coast, did get a downgrade over concerns from Stifel over immigration policies and aggressive immigration policies, not only on workforces, but prevalence within Hispanic communities and potential chilling effect on people going out and spending money. That was the first time I had seen a note like that in this sector. So we'll definitely be watching to see if there is any more update or commentary, not only from analysts on Wall Street, but also from the companies themselves.
Yeah, serious note there. Kate Rogers, thank you very much.